Now, back to the big story of the day, which is the RBI. So the CRR cut came 50 basis points, which means more liquidity in the system. As expected, it did not cut the repo rate. The RBI lowered its growth forecast and upped its inflation forecast as well, in line with what the market expected. Latha is here to put all of this in context and, more importantly, kind of sort of tell us, are there any clues in what the governor said, the questions he took and the answers he gave about what policy in the future holds? Latha, over to you.
Well, first up, I think one of the most practical policies to be able to exactly train its eyes on the problem of liquidity not yet ready for a rate cut. So on liquidity itself, there is a little bit of surplus liquidity in the system, but it's whittled down from about, over 4 lakh crore end of September. It's come down all the way to barely 40,000 crore. On some days, it goes on into a deficit and banks are borrowing from the Reserve Bank. And that's very obvious because cash withdrawal is more during Diwali and the normal Q3 period. It's more during elections. As well, the Reserve Bank has been selling a lot of dollars, 60 billion or thereabouts. And that also has pulled out a lot of cash. At least 4 lakh crore has been pulled out. About 4.2 lakh crore was the surplus as of end September. It had come down to 40,000 crores end November. Of that, the CRR cut replenishes 1.16 lakh crore. There is a money multiplier, and in course of time, it will become 4 lakh crore over 6-7 months. But the governor, we asked him, and the governor agreed that there will be a liquidity deficit continuing. The cash outflow, the tax outflows are temporary because the government spends it and it comes back. But cash withdrawal by you and me, as well as when the Reserve Bank may continue to sell dollars, given that the Trump presidency is yet to begin, we could well see, attacks on the currency or withdrawal of foreign exchange by FPIs. There will be a deficit. Will he do more? Over there, he did not give away the big weapon that the market was looking for, which is open market sales of open market purchases of bonds. People were expecting that if he did that, then he could put more money. But he did not say that all those are on the table. That would have been his usual statement. He just did not allow himself to be drawn in. So I think OMO purchases at the moment is not on the table. When it comes to the repo cut, obviously the question now is, we didn't expect this time. Will it happen next time? I just want to point out to a couple of statements of his. He said, prudence, practicality and timing of decisions become critical. RBI endeavors, again, quoting him, to implement timely and carefully calibrated measures to derive maximum impact. I mean, the way in which it was contextualized, he very nicely defended why you can't do a cut now, because it is a bit timely and practical. If you do it now, there is no liquidity in the system. It won't get passed on because everybody is dying for deposits. How will they pass on a lending cut? So I think it was very beautifully timed, phrased and explained. And then he went on to another statement. It is necessary, given the flexibility of the neutral stance, to wait for and monitor the incoming data for confirmation of the decline in inflation. Now, everybody's guess is when you meet in February, you will see a fall in inflation. So again, there seems to me at least a hint there that when there is a confirmation of the decline in inflation, they can move. They will not wait for actual 4%. That's my guess. And to be fair, let me come to the forecast itself. In the first place, all the 4 forecasts of inflation, that is for Q3, Q4, Q1 and Q2 as well next year, has for growth has been lowered and for inflation has been upped. But the Q2 FY26 next year, that is almost a year from now, the forecast is 4%. So if I put both those together, the governor saying that, we will look at the incoming data for confirmation of fall in inflation and their forecast of 4% inflation in Q2 FY26, it very much looks like a repo cut is possible in the February policy. Once again, I would think that the Reserve Bank had lost a bit of its credibility by completely being out of line in its Q2 forecast. It's restored practically all of it by boldly bringing down the growth forecast by between 40 and 60 basis points for the various quarters.
Okay, all right, Latha, thank you for explaining that to us. And by the way, before we take our next break, I just want to point out one trend that's very prominent now in the market. a big surge in auto stocks all of a sudden, and some consumer stocks. So I don't know, I mean, is this predicated on what Latha was saying, that maybe eventually you move towards the rate card, and with the CRR card, there's greater liquidity? Remember, the governor said that it is up to banks to do whatever they want with the additional money that's at their disposal. But the auto index has surged to the high point of the day. Look at Tata Motors, Bajaj Auto, look at Maruti, look at Eicher Motors, look at stocks like Tata Consumer, ITC, Titan, Trent. A bit of a consumer flair in the market. It's not, you can't ignore it, and you have to take note of it for sure. Okay, on that note, let's take that break, come back on the other side with some more market talk.
You know, it's funny, but I was in the second standard 25 years back, so it's long ago. I always wanted to be a journalist, but you know, by the time you come to that 10th standard, 12th standard mode, your idea about life changes. So I come from a family of chartered accountants. Despite wanting to be a journalist, I went for being a chartered accountant. But that thing of being a journalist was always there. I was working as a tax consultant, nothing to do with stock markets. But then I thought, okay, this is the time to make that switch, do something to be with CNBC-TV18. And in one of the conferences CNBC-TV18 was covering, I was there, and Mr. Anuj Singhal, who was the stocks editor at CNBC-TV18, I met him and he was like, would you like to join us? I was like, Neki or Pooch Pooch? Of course, I would like to, I would love to. It's been 8 years since then. I track stock markets, I track mutual fund, personal finance, I track sustainability, which is my passion project. So this is a place where if you want to do more, they'll never stop you. Ideating something is never a problem as long as you are creating the best for your viewer. And what is a better place to do that than CNBC-TV18?
Celebrating 25 years of CNBC-TV18.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.